Hi everybody, this is Amanda Davis, owner and founder of Business Solutions by Design, your accounting ally, coming to talk to you this April about all things legal and tax. So not too fun topics, but they are important. So we're going to kick it off with legal formations of the business. So if you want to start a business, what are those structures going to look like? So we got some general ones here for you. Going to talk about some advantages and disadvantages, but I do recommend that before you make your final decision on which legal structure you would like to go with, to consult an attorney and a CPA, preferably get them in the same room and talking to each other in front of you. That way you know that you're being served the best and you're getting the best advice for you, your family, and your business. The first one, the easiest one, is the sole proprietor. You almost have to do nothing to get this one going. Everything is under your social, everything's in your control, and everything is associated with you. So basically what is happening here is you don't have to really file to get a legal structure. You effectively have none. You have no separate identity from your business. So if something were to happen legally, there really is no separation from you and your business. So that person or the company or whoever's going after you really has fair play to go after everything you own personally plus the business. So the downside of a sole proprietorship is there's really no legal protection and in terms of liability, and the upside is there's very little cost and you can just kind of get going. So a lot of businesses are started as a sole proprietorship because it's really easy to get going. If you have more than one person, you may want to consider a partnership. It is relatively easy to form. You have it depends on the partnership. These can get a little complicated. They're not too hard to form. You do have to have a separate tax return that you would file, so there is an additional cost. There's some additional filings with the state. The disadvantages is who's ever the general manager, whoever's running it and in charge, has unlimited general liability. So you don't get protection there. You can have limited partners with limited liability protection. That gets into a more complicated form. And anyway, the person calling the shots really has the end game in terms of liability. Now you're going to have multiple owners, so you have to have at least two. And so you have to have some consensus. It's not everything's in your control, and that kind of stuff. So again, there's a separate tax return, there's some separate filings, and you have to deal with other owners, and the person calling the shots has very little, not really at all, liability protection. So that could be something that you may want to consider. There is a limited liability partnership. The limited partnership, same thing, is pretty easy, but you're not going to get away from somebody who's a general partner. So that's kind of the end of it. And you have to have at least one general partner and one limited partner. And the limited partner does have a little bit of protection with liability, but the general partner is basically calling all the shots and running the business. So there you go. And there's some additional requirements when it comes to it. And a partnership, again, would need a separate tax return information. Limited liability company, like an LLC. There are some states, and New Mexico is one of them, that allows you to form an LLC that only has one member. So I'm an LLC, a limited liability company, Business Solutions by Design is, and that's kind of your jump starting out point in terms of legal structure and liability. It doesn't give you a lot of liability protection, but it is a starting point. It's pretty easy to get going. The cost in New Mexico is like $50. You fill out some stuff. It's not a big deal. It's pretty easy to transfer ownership. You can actually have it on a Schedule C on your tax return, so there's no additional tax return. That kind of stuff. So it's pretty easy to get going. It's not too complicated, and it provides a little bit of liability protection, and you do not have to have a separate tax return. So there you go. And then we move on into the corporation structure. So the corporate structures, you initially would be a corporation, which would be a C corporation under the IRS tax code. And that means that you are taxed as your own entity. So that's where the double taxation kind of comes in. Once you get the corporate set up, a lot of people actually request S status, and that's the S code of the IRS tax code for corporations, which means small business, and the taxes are effectively taxed at the individual tax rate as a flow through. So long story short, there's just some additional tax benefits to an S corp, but there's also some limitations. So a C corp, it's like the biggest, baddest protection you can get. It's actually, the company is its own taxpayer, its own legal structure. It's its own legal entity. So it has to pay its own taxes. Limited liability for stockholders. The life of the business is unlimited. Ease of to raise capital, transfer of ownership through sale of stock, and you can use different classes of stock, voting versus non-voting, for example. The disadvantages, it's complex. You have to do a little bit more to get it set up, plus you have to keep it going by having minutes and all that operation. So that's one of the downsides. And there's also a double taxation if you're a C corporation. If you elect S status, you have the corporation status, so you have the liability protection for the shareholders. It's an unlimited life, but there's restrictions on the number and type of shareholders. So for example, you can't have more than 100 shareholders in a small business corporation. I guess that would make a lot of sense. And you can't have a foreign entity own your S corp, and there's some other restrictions that you can know about. Again, you have to pay a little bit more. You have to file a separate tax return. You're paying the taxes through flow through on your personal return, but there's some additional steps and costs associated with it. A lot of businesses are S corp, so that is a very good corporate structure for you to consider if you're looking to get a little bit more liability protection for you, and if you're looking to transfer ownership later on in life, so on and so forth. So these are some things that you want to consider. Like I said, you definitely want to get your attorney and your CPA involved. Do not make a decision without at least reaching out and talking to one of them. I recommend getting them both in one room talking to you at the same time. Good luck to you on your legal structure. Let us know which one you choose and how it went. We look forward to hearing your comments and talking to you very soon. This is Amanda Davis with Business Solutions by Design, your accounting ally, signing out. We'll be back talking to you next week.